Microphone check and screen share check, please. All right, good evening, guys. Nightly Strategy Podcast for Friday night, September 23rd, 2022. Tortoise Capital Management. So this is an update on work in progress for Phil and Griff, who have been beavering away at the Applied System Development Process for Traders workshop, in which they are going to help us by creating the minimum viable product for helping you develop your own applied strategy from among the things we offer that is aligned with you. And they're going to go through that plan, prepare, execute, and assess process with those essential chunks right there: understanding the market, how to plan your trades, how to prepare and frame them, how to position size, how to get ready mentally, then how to execute when you're ready to trade, how to get in, manage it, and exit, and then how to assess those results. They're going to take Griff's work on the Kata challenge system that I gave him at the start of this year. He hasn't had a losing week since. And they're going to be cherry picking from among these nightly strategy podcasts for key and essential micro lessons that supplement this material with some of our work in progress. So I'm pretty excited about that. It's getting close to production. There will be a limited release of that to subscribers and people within the sound of my voice for the early mover advantage. And then we'll release that a couple months later at regular full price to the world. So that's that. Let's take a look at the market today. Well, we'll start as always on the weekly with a review of the regression line fractal framework so we can feel the barometric pressure of this market and see what we got going on here. Not pretty. Unless you're short or you're an active trader, in which case you love this. So we've got almost a perfectly symmetrical pattern here where we had a swing low back in late June that moved up in 1, 2, 3 levels. You know, leg 1, a pause when it got across the dragon. Leg 2 to the RL 270, and then leg 3 when it crossed the 270 and made this little peak. And then on the way down, we've had 1, a bump, and 2, and are back down to 367, which is right at the belly of the dragon. Right where you would expect it to get to if the world is symmetrical. You'll notice that the RL90 has rolled over. The 270 wonders what all the fuss is about, because that thing has just been steady ever since the 90, the 30, and the 10 broke south and have been slowly pulling the market south. This thing is just ignoring all other things, and the tide is going out. There was one intermediate trend here where the 90, which broke out at the same point, pause. This little hump right here was enough to flatten out the 90. That was the first chance. Could it get back here and go? No, it couldn't. It resumed down, and so the 90 comes to this checkpoint. That little fake was nothing. Notice how it only got a little bit past before it resumed to the downside. This time it got past a lot before it resumed the downward move. So it's run out again. And now this one just got back to the 90 and rolled over. And it wasn't until we had a very strong move through the 270 to the upside that the 90 even reversed. The 90 reversed right here at the same time that the 30 and the 10 crossed the 270. That was enough. This move to here was enough to make the 90 roll over. And then this move to here was enough to cause the 90 to get to the 270. And so that was the turning point. Is it going to go higher and then come all the way back to here? Nope. The 30 and the 10 both roll over and drop down. There's the test here at the 270, and then it continues for the next leg down. So here we are at the fundamental point right around 367. And I don't know, but that sure is a critical state, because if this breaks, then all of this joy is for nothing, and it's just going to continue. That's bad. But if this holds, then getting back to this support level would not be surprising. That's what it did the last time. So could it get to there? Yeah. And could it then get to the 270? Yep. And then through the dragon? Yep. And then to the top of the dragon. So that's the pathway to the upside. The pathway down is just full of gloom. Not a good thing. So that's the RLFF. Here's the 150. So now what we're looking at here is that 150-day look back in sets of 30. 1, 2, 3, 4, 5 sets of 30. So you can see how the real pain and suffering, the enthusiastic climb, the return to suffering. And that's where we are right here at that crucial level. So we've got a market that closed here at 367 and some change. It's now 23.5% off the all-time high. We've had that downward pressure. Look how important that PSAR flip is in this methodology. Boy, if you needed a guide in troublesome times, that's a pretty good one. And we are far away from this flipping anytime soon. So this break right here. So now what happens when the previous RL10 breaks? Well, here was the last time the RL10 broke. And when that broke, it was a big gap down and sell-off. And the time before that was this one. Big sell-off. When this one broke, big sell-off. When this one broke, big sell-off. When this one broke, big sell-off. So there may be a pattern developing here. Oh, I missed one here. When that one broke, sell-off. So when the belly of the RL10 breaks, that's crucial. This one also happens to be we're right at the 30-day low and the 270-day low, or 150-day low, I should say. And that's the base. That's the base of this whole pivot. Wow. Remember what that felt like 30 days ago? Yeah, I do. I was tempted to regain exposure in some of the long-term accounts. I said, well, no, it's still bare normal. In fact, if I remember, this peaked into sideways quiet for about 2 days. And then it said, no, doing that. That's what happens. So let's look in the 30-day look back. So now when we zoom in a little bit more, now we can see that yesterday's smaller range, which came after 2 days ago's big sell. So this was the question. Was that going to be the bottom and on the range compression that we had? Nope. Gap down, sell off. A late afternoon rally to make it not quite as painful, but boy, that's still hurtful. And here's the last test. That was the test of the 150-day low right there. Mm, mm, mm. Targets to the upside. A breakout above today's high has to close this gap. Then it's to the edge of the dragon, spine of the dragon, peak of the dragon, which is the 5-day high. This is where the PSAR dot will be on Monday at 390. Then it has to get above the hump of the dragon and the peak of the RL10, which is up around 400. Then the 10-day high, and so on. If this breaks, run for the hills. Here's our 10-day look back and the 5-day. And here's today's price action. You can see that gap down and then just a horrible sell-off. Then the last hour gets it back to the PSAR to raise the question, was that the bottom? Which way do you want to bet on that? I don't know, but I'm going to treat that as a critical state. If it goes to the upside, here's support. There's a resistance level. And the top of the dragon. Those are the two next targets on the way up, 375 and 385. And then the breakdown is just there is no support within sight. A trivial one is at about 360. And when that breaks, it's Katie bar the door. Today's performance in the sectors. So we had the S&P was off 1.68. It was down 2.5% at one point. You got emerging markets, and the Russell were the worst at 2.5 and 2.4. You have the Qs as bad as the market at 1.63. The Dow at 1.55. Treasuries were in the green at 0.41, but they're still at that relatively weak price of 105.70 with yields starting to climb. And that's also the cut line between making money and losing money. All right, let's look at the underperformers today, starting with the sectors. Get them all on the screen there. So again, the S&P at 1.68. So you have staples, biotech, agriculture down to 1.94. You have ARC Innovation, materials, the FANGs, commercial real estate to 2.17. Consumer discretionary at 2.3. ARC Genomics 2.5. Bitcoin, Mexico, lumber, the other lumber, blended commodities, lithium, wheat and precious metals, clean energy, and Brazil all the way down to 4.5. Oh. Tesla at minus 4.6. Oil 5.3. Marijuana 6.18. Ethereum, uranium, energy, oil exploration 8%. Individual companies, Devon Energy 8.6. Cliff US, that's convenient. All three of our metals right in one cluster. 5.3 to 5.9%. This just feels like I have a sore tooth when I keep playing with it. But, Robinhood, 2.18. Intel, 1.96. Coinbase, 1.68. That is a major league haircut right there. Wow. The upside is easier because there's not that much of it. There's the S&P. Here's our cut line with things that made money. Sorry, right there. So the S&P at 1.68. You get finance, 1.58. Real estate, tech, the Aussie dollar between around minus 1.3, and then the VIX at 4.81. Now, individual companies held out a little better. You got Rivian, 0.7, Squarespace, 0.6, NVIDIA, Texas Instruments, and where's Intel? There's Intel. There's our three chips. There's our semiconductors. NVIDIA, Texas Instruments, and Intel. Could have been worse. Then you got PayPal at minus 0.8. Microsoft, 1.25. Apple, 1.5. So just no rest for the wicked. No safe haven in this storm. Brutal. All right. Here's my sniper trade for the day. The big gap down, unsurprising, in U.S. steel. This is on 3 minutes, so that's our gap. Here's our risk box. That's 15 cents for the R10. Here's the OR3. That's your OR3 right there. The second bar opens, breaks down below that, so easiest short of the day. Standard risk box. Moves down, flattens out, comes up through the dragon. I take it there and get about 2R. Not interested in the PSAR flip on this one. But I resume the COTA 2 short. That goes nowhere for a scratch. So 2R on the sniper trade of the day in U.S. steel. I want to go to the traders, and we'll see how they did, and then close out today before we get to the reports for the weekend. All right, Tim was in the zero state and kept firing today, but his timing was a bit off in his view. So let's see what we got here. I'm going to say don't change your habits on the basis of one day of underperformance. You're still net positive. So that's a good COTA 2 breakdown. Good exit. That's a good shot. I like the short. That's just timing. It just happens that way sometimes. And if you keep taking the shots, eventually, I mean, those are going to hit for you, and that would be about 3R. Of course, stop eating lunch. Food is a sign of weakness. Yeah, you were kind of stuck in some SQCs because they do all look the same leaving the station. That's a good PSAR flip for a half an R and a half an R. So that's the price, you know. That stop and reverse. I wouldn't change. Take a look at your overall stats. One day doesn't make a trend. I think you go back and review your last 50, and reset your emotional state, and keep working. What I might say is on this one, in this kind of a market, when you got the VWAP here, if you are only going in the direction of the primary trend, you'd cut out about half of those losses, I might say. And when you're in sideways chop, we want to find the mover. All right. Here's Woj with Devon. Big gap. What's this on a 3? Yeah, OR3. Short. 2R. Now, for Tim, you're already trading energy. You might see what you can do in the U.S. markets with some of these more directional companies that have more retail traders and therefore more psychology. Now, notice this one here. There might have been a 1, 2, 3 entry here to get paid, but I don't mind you just taking that one. You stop trading here, but that would be the natural next one. Tesla, find the mover. Big gap. There's his OR3. There's the breakdown. Standard risk for 3R. I'd be looking strongly at that one right there. But that's 5R between his two primes. XRP starts trading here. Missed that one. Tried this one. Quick scratch. Recovers. Scratch. Recovers. 4.8. Jiminy crickets. And then the Aussie dollar. Dude. Yeah, I mean, so that's 9 today, but that's another 5 or 6. Some for the day, 10, 25 for the week. Finding the movers. So it may be time, Tim, that you start taking a look at some of the opportunistic movers in the markets that you're in that are correlated to energy. I think you're trading the Euro time frame. There may be some DAX movers that are available to you. Or the currencies. You got a lot of guys showing some skills in here with the Forex. All right, my brother, what were you scheming up today? He notices you start making those in blue, because I was thinking yesterday that was entries, but they're not. Make that blue as like an indicator, or a yellow to draw attention. So there is the belly of the RL10 crossing over the baby dragon. Alert. Second alert, it crosses the spine. He buys the breakout above the PSAR flip right here. Adds at the 2R battle drill. Preserves. He sees the crossover. Sees it crossing the dragon. Hits the PSAR reverse. Adds at the 2R battle drill. Covers on the rebound. Sees it comes to the dragon and rejects. Short. 8R for Johnson & Johnson. Find the movers. PayPal. Let's see what we got here. Alert 1, alert 2. Buys the cross of the dragon. Rolls over. He got what was there. This was available when it comes out of the dragon, one of those two. Or here when the RL10 comes out of the dragon. But he's got, I think, a span of control there because he was working hard on Johnson & Johnson at the time. So fractional here in PayPal. NVIDIA was about the same thing, and he did basically the same Tesla trade that Woj did. So 12.5 for the day for my brother. Just saying. All right, we'll shift to the weekend reports now that close out for the day. All right, so this is our weekend report. bearish normal. We're not even in volatile yet. Oversold everywhere. Closing in on the next rebalancing. Everything is in cash. Those are the leaders at the start of the month, the leaders currently, but because everything's under its 4-month moving average, this whole thing has been in cash. ETF2, which takes its marching orders from the 10 indexes in the world market model, is all cash and remains all cash. That's a pretty good asset allocation risk modulator right there. We started getting a whiff of risk Z hitting as it starts to fail. Yikes. Yeah, so we're pushing, as you recall from the earlier discussion, we're pushing these price levels at the peak of panic, and volatility is just starting to point the way downward. You know, we haven't even seen volatility yet. We've seen the time frames there. So we'll shift to, yeah, BMR1. Blended monthly rebalancing portfolios. This is easy. All cash. Latin America was about the only thing that didn't get assassinated. Latin America. Oof. Energy, that's why I like trading it, not holding it. Here's some technology for you. That's the leadership of the future generation right there, right? Yeah. And here's treasuries. That's your risk-free rate of return, right? ETF 32, Brazil. You saw our 20R trade on that one earlier this week. Brazil, Latin America. Boy. Dow 30. Man, Disney and Chevron getting slaughtered. Goldman Sachs. This shall not stand. Where's that plunge protection team when you need them? American Express. Note the finance sector. You don't think there will be some phone calls into Washington this weekend? Look at 3M. Wow. Boeing, DuPont, and Caterpillar. Holy cow. How are you going to rebuild a nation when that's happening to your industrials? Intel. Good Lord. Where's Elon? He's waiting for that to bottom out, I predict. The healthcares, on the other hand, things like, Johnson & Johnson and Amgen and Procter and Gamble, on a relative basis, that's not so bad. And United Health, not so bad given what the other opportunities were. Long term, all eyes on Apple and Walmart. That means it's on sale. That means it didn't get murdered like everything else. I feel like a hyena picking through the bones. Hyena's got to eat. ETF Max. Wait, did I miss one here? No, there we go. ETF Max. Let's go to world market model. The U.S. is still holding up relatively well, mid caps and small caps. Latin America, Brazil. Let's see. Brazil has moved to the top of the stack. Green and white. Was good, now great. Exploit new strength. New leadership. Short-term treasuries. Latin America. Strength coming out of oil exploration. So white and green is this one. Was great, now it's just good. Preserve profits, watch for a resumption of the trend if it reverses, and can be traded intraday. The tradables, these are all ETFs, and looking at average daily dollar volume of the last 30 trading days, looking at the ATR percentage column. We want them liquid. These are all the liquidities, and then this is the volatilities. Are they tradable intraday? Energy, bio in Brazil, oil exploration, gold miners. Shifting to the daily. Let's go to dashboard number 1. Come back here. Yeah, we've seen that one already. The Dow Tactical Summary, all of the 5 DDs, all of the auto framers, all the collapsing breakdowns. So it leads you to look at things like what's not collapsing and breaking down, and why are they so different? I don't know, but Johnson & Johnson sure qualifies. Merck Healthcare, United Health. So XLV should be doing pretty good right about now. Etf Tactical Summary. XLV Healthcare was a winner today, and it's one of the few that hasn't collapsed on any time frames. Latin America is one that hasn't collapsed. Brazil hasn't collapsed. All the other globals and all the US and the XL series. These things leave tracks in the snow for you to understand their behavior. Alcoa, US Steel, Cliff, Tech, Materials, S&P. That's all I need. There's your squeezes. There's the Doji in Alcoa, and 3M is a squeeze. Godzilla just in a state of enragement. I like the green and greens because they are moving hard. Caterpillar. I think that's Citibank. In the tactical symbol set, marijuana is green, green. Both your lumbers, commercial real estate. Wow. And then Alcoa, Russell Small Cap, US Steel, Microsoft. This is a buyer's market, trader's market. Only one each in the fireworks, and he's a popcorn because he's so quiet. And then one fence sitter. All your double greens. For your reference, the auto framers for the sniper. Winter on everything in the Four Seasons. And then here's our tactical symbol set, sorted by the descending Z5 volatility. There's your marijuana, energy, uraniums. I mean, this is a trader's market. If you're a trader, you love this. It's tough to see people suffering, though. That's the tail of the tape right there. As if you don't already know that. Merck, Johnson & Johnson. By any visual measure, when those RL10s break, bang. So this one's important. Here's where the RL30 turned the last time at -4 sigma. The slope of that is almost 3.5 sigma right now. And the slope of the RL90 has done that, as just starting to roll over at the 0 line. This was just enough to get the RL90 healthy, and now it's seeing that. So we have not yet seen the market begin to panic. That's what happens on this. That move from here to here was a -20%, and it's just starting to roll over now. Get Joe Biden's steady hand at the wheel, though, right? All right, that's I think, is that everything we got today? Yeah, that's everything we got for today. We'll be ready at 8:30 in the morning for the coaching group and the true storytelling. Tomorrow night, weekly swing frames. Although we're going to see more, I think, of the 30-minute charts to the downside with Ken H on that one. When there's nothing to do, you should do it. You should sit on your hands, unless you're a short trader, and then this is prime time for you. Take good care, guys, and we shall see you tomorrow.